Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003 to provide you advanced technical analysis, market commentary, trade ideas, and sophisticated mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems, about 80-90% winning trades, and of course our KISS systems, which I'm more excited about than anything I've been in 25 years of doing technical analysis. I'll discuss those briefly here in this video. But hope everyone had a nice weekend, and let's go ahead and get started with this weekend market report. So again, hope everyone had a nice weekend so far. It's early Sunday afternoon, and this of course is the comprehensive Breakpoint Trades newsletter on the markets and trading systems, and it's Sunday, January 28th. This newsletter is divided into 6 major sections. First off, I'll have my open discussion. I'm also going to discuss our KISS trend following systems right after that. Then we'll go, of course, into the general market analysis. We'll do a top-down approach on the major indexes, from weekly, monthly views all the way down to 60 and 30-minute charts. We'll look at some of our custom indicators, such as the VIX, the McClellan oscillators, etc. We'll also look at bonds and the 10-year treasury yield, and of course, the yield curve. We'll do a sector review. We follow 21 sectors. We're not going to look at all those, but we'll look at a handful of them. Well, then we'll look at the US dollar, commodities, crypto, precious metals, GDX, and I'm going to follow up with trade ideas. I only added a couple trade ideas this weekend. Honestly, I'm not seeing a lot of great actionable new longs showing up on my scans. So I did add a few, and I'm going to discuss the ones that we've had on our list for the last 1 or 2 weeks. Okay. Again, I hope everyone had a nice weekend. And, just briefly, as far as the market once again gained, had a nice positive week. Both the S&P and NASDAQ gained about 1% for the week. So that's not a huge move, but they gained 1%, while the Russell outperformed, gaining 1.8%. The majority of the 21 market sectors were up. The strongest sector last week was energy, clearly. XLE, OIH, oil services, up 5.1 and 6.3% respectively. Communication services, that contains things like Amazon, stuff like that, up 3.8%. Banks up 2.4%. So those are our strongest sectors. Crude oil had a big week, up 6.5%. So we've had some long ideas on our watch list, such as ExxonMobil, CVX, and I added a couple more tonight. Again, most of the commodities gained, from copper to agriculture to precious metals. All right. Now, as far as the market, like I said, what can I say? Like a broken record. We're in an uptrend. We remain in an uptrend. Market's been uptrending essentially since the October lows. Okay. Nothing's changed. There are divergences that we're monitoring. Some divergences in some of these indicators, like the McClellan oscillator, stuff like that. But remember, divergences themselves are not sell signals. They're just like yellow flashing lights, and it just means you keep on guard, have your stops in place, stuff like that. But the trend is clearly up. I do think we're going to get some sort of correction here early this year, but also short term here, we're in earnings season, and usually the market holds up during earnings season. And this week we have big ones. Google, Alphabet, Microsoft report on Tuesday, January 30th. Apple, Meta, Amazon report on February 1st. Those are obviously huge market movers, and most of these will probably do fine on earnings, which means the market will hold up in that. Okay. The big news items for the week are the FOMC on Wednesday. That's a big one. And then, of course, the non-farm job payroll reports on Friday. All right. Let's move on. Item number 2 shows the index sector table, what transpired last week. You can see Friday was basically a bifurcation day with the Dow and Russell just slightly up or flat, while the NASDAQ and NDX were down slightly. For the week, you can see the gains here, which I already discussed. Here's the 21 market sectors we follow. Again, the majority were up. There were a few handful that were down, such as home builders, consumer discretionary, semiconductors, but the vast majority were up. Again, strength concentrated in the energy area primarily, right here. XLE oil services, and banks, and of course, communication services. Currency-wise, US dollar gained 0.3% for the week. Cryptocurrencies, they had a recent correction from that buy the rumor, sell the news, but they're bouncing back here. They were up nicely for the week. And some of the stocks like Mara, et cetera, started to bounce. Commodities, mostly to the upside. The only downside was natural gas. Okay, every other commodity here was up. Energy area, especially with that 6.5% gain in crude oil. Unfortunately, gasoline also went up 6.4%. Unleaded gasoline at the pumps. Copper up 1.75%. Like all these nice gains in the ag area as well. Now the precious metals, gold ended up down 0.5%. Silver was up, so a little bifurcation there. And as far as GDX, the miners, they were up 1.37%, so a little outperformance there. But again, this sector, like I said, needs to show me. Kind of like Missouri, the show me state. Gold bugs need to recover this. Otherwise, I don't really have any interest in trying to catch a falling knife. All the other stuff is moving. And bond market, 10-year, 30-year, we're slightly up. Next, item number 3 shows the economic news calendar table. Like I said, the big items are the earnings on Monday or Tuesday and Wednesday with a lot of those big cap FANG type stocks. We have the FOMC minute rate decision on Wednesday. We have non-farm job payer reports on Friday. All right, let's go and jump to the rest of the newsletter here. So we're going to go and jump into the KISS systems here. So in case you're new here, the KISS systems, keep it simple, stupid, or whatever is the acronym I came up with. They're a trend following system. They're long only. I originally made them for a 401k type accounts, such as an RIA would follow, where they don't short. And they're long only, but they have a stop technology, so they always give you an exit strategy. And they have the benefit of the non-curve fit settings on the KISS system virtually produces profitable trades on almost any instrument, which I've never seen anything like that in my 25 years. I've been doing technical analysis since basically 1997 when I started my first major job at Monsanto when I was a chemist. That's when I first started looking at charts. I've been doing this a long time, probably seen millions of charts. And I've never seen anything like this KISS system that can work on virtually anything without any back testing or curve fitting to it. So pretty amazing stuff. Again, they give you an exit plan. So you have the benefit of generally being able to capture most of the gains or 2 or 3 times the gains of buy and hold with maybe 1/5 to 1/10 of the drawdown. They keep you out of bear markets and out of major corrections. And you're just basically participating in the uptrends. Again, I'll be doing hopefully soon here, I'm going to do a separate video on these systems that I'm going to put on the website. But that's what in a nutshell. Anyway, on the KISS systems section, right in the systems area, you have these various tabs. We follow over 650 individual stocks and ETFs. We have a basket. We have some of the mega cap tech stocks here, all the NASDAQ 100, all the S&P 500 stocks. I think about 130 or so ETFs, all the Dow Jones stocks. And you can set favorites, which I'll go over in a minute. Okay, but anyway, this right here shows you some of the mega cap tech stocks. These are the ones reporting this week. Apple, AMD, Amazon, Google, Meta, Microsoft. These are all reporting this week, guys, Tuesday to Wednesday. So those are big names. But you can see on the KISS system, so Apple system, it just recently went long. That trade's still down 1.3%, but again, very small. It's down very tiny amount. Here's the current stop. Smart trailing stop is at 185. And you can see the other ones are all up nicely. Microsoft up 18.6% from its entry on October 25th. Since that time, system's been able to raise its smart trailing stop 11 times. So just constantly adjust those stops higher to protect your gains, give you a nice exit plan, but it keeps the stops wide enough so they're not hit on a bunch of noise. And current stop on Microsoft's 383.70. You can see the Qs themselves are up 20.6%. NVIDIA is up 22.5%, etc. Nice gains here. Let's move on. Image number 5. So here's Microsoft, and this is right from the website. Now, I mentioned this on Friday. A lot of you discussed it on our trading community, but for those of you who haven't looked, so whenever you're on the KISS tables, you can click on the symbol to view a live dynamic chart that you can, down here, you can drag this and zoom in and out. It's really cool. Go back to time frames, you can zoom in, zoom out, whatever. So the vertical line, we had a vertical line where the systems went long. So you can see Microsoft went long right here. This was October 25th. Its initial stop, smart trailing stop was 313.20. You can see it moved it up over time, kept it wide enough, and currently it's right here. And it's like I'm cutting that current price off there a little bit, but nice example. And here again, the systems are not perfect. Here's an example back in September. It looks like it went long and it hit its smart trailing stop there for a small loss. And you can see the system went long on Microsoft basically back in January, held it all the way until July for one heck of a trade. Look at all those smart trailing stops. And this is typical of the KISS trend systems. Usually after a big trending move that it catches, a lot of times the odds favor the next one being a little whipsaw. It doesn't always happen, but that's the case. A lot of these trend following systems like the KISS system may only have 60% winning trades, but where they make their big money is on catching the winners and the small losses are small. Kind of unlike the mean reversion systems that have perhaps 90% winning trades, but the trades end up being generally very short term. You're not catching entire trends. But that's an example on Microsoft. By the way, there is a DeMark 13 up here, so short term, that's a little concerning. Chart number 6 here is CrowdStrike from the KISS systems. Again, this is an idealized example, but system here you could see went long here on, what is that date? I think it was August. Initial smart trailing stop at 140.50. You can see all the times it raised those stops. Current stop is 269.90. Raised its stop 22 times, which is impressive. Current stop is 269.90, and the trade from entry is up 88%. And this isn't a back tested result, guys. This has been on the website. So this has been live. This has been, the KISS tables here have been live since the early summer. So this has been live. You can see the previous trade was a little whipsaw. So that's a great example of the KISS system in action. Next, again, if you're a subscriber to Breakpoint Trades, and if you're not, you need to become a subscriber because you're missing out. So we give the ability, you can just check these tables yourself every day, but we give the ability for this website to automatically notify you. And so what you want to do here is come to the, you want to set some favorites by clicking on the stars, that'll set it. And then you go to the favorites tab, you click receive alerts about your favorites. And whenever there's a change to one of your favorites, you know, let's say that you're following Apple or AMD and it goes long, it'll email you. If it raises its smart trailing stop, it'll email you. If it exits, it'll email you. So great notification. We are planning to add SMS notification to this as well. And of course, as you know, I'm planning to add a new high performance section to the KISS systems that have maybe 2 to 3 times the performance of the standard. Okay. We are going to start charging for this sometime soon. Just be aware. I mean, you know, don't think anyone will have any problems, especially with the gains that it's been doing. It's a pretty amazing thing. A lot of you love it. I think right now about 400 of you have set favorites, and so that means there's still several hundred of subscribers that haven't done that. You should do it. You're missing out. Valuable resource. Okay, that's enough of that. Again, I will have a separate video on this sometime soon, going more in depth, but let's go ahead and move on back to the general market analysis. So image number 8, this is a monthly chart. So each candle is 1 month of the 5 major indexes. So again, everything's up nicely for the month, anywhere from 1 to 2.5%. Nice gains. Generally, as January is positive, that usually bodes well for the year. But otherwise, we are above the upper Bollinger Bands here on the S&P and Dow on the monthly. Just be aware of that. Next. But as far as the going back to that chart, again, long-term trend has been up, right? So image number 9, this shows you a weekly version of the major indexes. So remember back in October, we had these consolidation patterns, kind of flag channel-like patterns. Well, we had those in place, and once we broke out of that, it's been off to the races. We've held the 9-week exponential moving average on all these the whole way up. Bollinger Bands are really expanding here. See that on the indexes. Next. Chart number 10. Here's talking about the KISS system. So here is weekly versions of the KISS systems on the indexes. Okay. Now the weekly versions are as you would expect. The smart trailing stops are a bit wider. I mean, they can hold trades sometimes for 2 or 3 years. So they're kind of like paint dry versions of the KISS systems. Kind of like watching paint dry at times because they'll stay in trades for a long period of time. You can see where the smart trailing stops are. One thing to note though, and I know a lot of you started noticing this on most of these, on the S&P, the Qs, and Dow, we have the mark 13. Again, doesn't mean we stop there, but that is something to take notice of, that we have the mark 13s. So moving average ribbons are getting pretty wide here. So again, that's why I do think after some of these earnings, market may be set up at least for some sort of correction pullback. Next, moving on to the S&P 500 chart. So starting with the monthly chart here, here's the monthly view of the S&P, which is up 2.5%. Again, as you know, it's making new all-time highs. Again, this just shows you the bigger picture trends. We had those kind of secular trends in the market, bull market in 1980 to 1990s. Then we had a period of cyclical bull and bear markets. And after the 2009 bottom, we've essentially been in this uptrend channel. That's your long-term uptrend. We've never broken that. We are setting up a potential large MACD divergence on this monthly time frame. But again, remember, these are monthly charts. That can go on for a long period of time. It is something to be aware of. This has also been a good guide on a monthly chart, the 14 stochastic. This 50% area tends to be a dividing area between bull and bear market moves, as you can see. Next, chart number 12, here's the Dow Jones. Again, just continues to melt up here. Again, the obvious thing here I see is a really big MACD divergence setting up. I mean, the MACD hasn't even crossed back over its signal line while the Dow is making new highs. You have a very wide moving average ribbon. Remember, these moving average ribbons are great guides. Whenever they're pinching, that's when you typically get your very strong, powerful moves. And when they get too wide, you usually get some mean reversion action. So again, I do believe this divergence will eventually play out. This to me looks like some sort of wave 5. And after a wave 5, you'd expect a pretty decent ABC-like correction. But for now, the trend is up. Next, chart number 13, here's a weekly version of the S&P. Like I said, we said a couple weeks ago that the S&P, it needed to at least tag that all-time high. It was a magnet, and that's what happened. And we've rallied further. We're testing the upper channel line here, this channel. So we'll see if we pause there or not. We do have some divergences in place, but for now, noting this channel resistance. Chart number 14, here's the daily view of the S&P. Again, new all-time highs, some dojis here. Like I said, almost all these indexes, we have this MACD divergence potential now where it's really lagging the price. Again, it's not a sell signal on its own, but I do think unless we have a huge, powerful move from here to negate this divergence, that it will eventually play out. Short term, again, your short-term supports are the 5 and 9 EMAs here. Next. Chart number 15, here's the daily KISS trends system for the S&P. Again, did a bang-up job about going long there in end of October with an initial smart trailing stop at 4,100. Moved it up quite a few times. Current smart trailing stop is still pretty wide now at 46.84. Should the market go sideways or move up a little more, we should see this smart trailing stop jump up again. But great example of this KISS system, what it would have done this year. Caught the uptrend all through the March to into July time frame. Had a little whipsaw trade there, and it's caught this nice trending move. And again, you have an exit plan in place. Next. Chart 16, this is a large image, so I'm going to make this a little bit smaller so that it shows up for us. So here's a chart of the S&P 500 back in the 2019-20 timeframe. We all know the COVID crash that we had there. So again, great example. The system was long there in 2019. You can see the smart trailing stops raising up. The last one was at 32.57. I think it looks like 32.89. It's got a typo there. So it basically, you didn't get out at the high, but you got off about 4% off the highs, and it allowed you to avoid that 30% market correction on the S&P while everyone else had to sit in it. System then went back long at the lows, and you can see what it done. So again, this is one of those rare times, hadn't happened in history before, where you had a 35% correction in the market in 1 month, and then it came all the way back that same year, basically by the fall timeframe. That had never happened in history before. So usually after a 35% correction, it may take a couple of years for that index to come back up. So that was one of those rare times. Again, the problem with the COVID, all the crazy money sloshing around in the system and the stimulus and all that crap. But, so all the buy and holders, they're all telling me, hey, buy and hold's justified. As long as you held, you were back to break even there in the fall timeframe. That's true. But if you follow the KISS system, think about how much you would have been, instead of been breaking even, think of how much you'd have been up by saving that decline, getting in back at the lows. So great example of the KISS system there. Next. Let me adjust this. So moving on, here's the intraday charts that I like to look at for the KISS systems. So here's the daily, half day, 130 minute, and 78 minute. Again, nothing's changed here. The ATR is support on all the time frames, right? And we'll see what happens this week. Again, no change in the trend. The moving average ribbons, they get pretty wide in here, so we'll see if that needs to reset sometime. Chart 18, here's a 60-minute view, or a half-day view of the S&P. Again, remember this area, this 4,600-ish area was big resistance. Once we took that out, it was off to the races. We then formed an ascending triangle here and rallied up here, and we're just consolidating. Now, one thing, guys, you see this big empty arrow area? This is supposed to be the moving average ribbon. Stock charts has some sort of bug. I've already alerted them to it, and that the moving average ribbon is not displaying on some of these time frames, which is really odd, but it is what it is. Hopefully that's resolved soon. Next. Chart 19, here's a 60-minute chart of the S&P. Now this one has the moving average ribbon. It's odd, it doesn't show up on a 30-minute. Again, weird stuff, but again, you can see the same thing, ascending triangle. And we have another little ascending triangle here forming now. So especially given the FOMC, the earnings, maybe we'll see this pop up one more time. Maybe we'll go to that, maybe this will go up to 5,000 perhaps, not too far away. Chart 20, here's a 30-minute chart. Again, notice the moving average ribbon isn't displaying. But anyway, you can see the little ascending triangle pattern there, a little more detailed. Next. Moving on to the triple Qs, NASDAQ. So here's the weekly view of the Qs. Again, up and away, like I said. Here's this wave count has been interesting to me. I've had this wave count set since, fall of last year. And this appears to be playing out. So we're moving up here. To me, this counts as a nested 1, 2, 1, 2. So to me, it looks like we're working on a wave 5, but it will only be wave 5 of this major 3. Once this completes, I am expecting a deeper ABC-like correction, as I show here, as a wave 4. Probably at least come down to this area that was previous resistance. Then I'm expecting another rally as a wave 5. And maybe once that is complete, that wave 5, then we have our deep correction. But this wave 4, it's a major wave 4, could be pretty deep. It should be theoretically deeper than this wave 4 that was in the fall because of the higher degree count. So I hope that makes sense. You can see the RSI divergence is setting up now here. Moving average ribbon's pretty wide. Again, moving average ribbon, it's a great guide. You can see it's pinched. That's when you get your monster moves. It gets too wide. You see here, you have your mean reversion pullbacks, pinching here. That set off this current uptrend. Next. Chart 22, here's the daily. Again, nothing to say here. I mean, we're just uptrending, higher highs, higher lows. Again, we are stretched here any day. Anytime I'm looking for a pullback again, but we have major tech companies reporting this week from Apple, AMD, Microsoft, etc. Google, Alphabet. Chart 23, here's the KISS system. So no changes here on the KISS system. Current smart trailing stops at 404.60. You can see went long there, almost at the bottom in October. Raised its smart trailing stop, quite a few times here. 2, 3, 4, 5, 6, 7, 8, 9, 10 times. Pretty impressive. So no matter what happens, this trade is profitable. Chart 24, here's the 4 time frames we like to follow. So daily here, the Qs look a little more stretched than the S&P, or they've been pulling back here a little bit. So we still have the end of bull cycle on the Qs just to be aware of. Wide moving average ribbon on the daily. That's the cycle indicator attempting to pick some sort of wave 5 high. We had a DeMark 13 on the half day 195 minute where we're pulling back from. You can see how wide that moving average ribbon was there. Again, ATR support on all the time frames. You can see on the 78 minute, we're basically testing it. We have a little support cycle dot right there. It's hard to see, it's right on the ATR. But again, we'll see if this is an area where we rally off of again. Chart 25, here's the 30-minute view of the Qs. Again, just kind of monitoring this little wedge-like pullback. Again, 30 minutes, not showing the MA ribbon. Hopefully that clears up this week. And chart 26, here's a 15-minute chart. Been looking for this correction of some sort of ABC, and still unfolding. Next. Chart 27, here's the Russell 2000. This is the monthly chart, up 2.36% for the month so far. And again, you can see how it held that long-term support in 2022, 2023 with previous resistance, and we've been stalling at this resistance up here. That's your big resistance, around 205.50. Next, chart 28, here is the daily. You can see, we first off, we rallied off that demand zone, inverse head and shoulder pattern back in the fall. Monster move up as the Russell played some catch up to the other indexes. Pulled back from this divergence, kind of chopping around here above the 20 and 9 EMA. You can see we've been stalling at this broken trend line. Chart 29, here's a 60-minute chart of IWM. So right now, again, you had this open gap, which was a magnet, and that was filled last week. Right now, you have a coil setting up here and sort of an inverse head and shoulder look if you look at this. It's not perfect, but you can kind of see a left shoulder, head, right shoulder. So we'll see, follow the direction this coil breaks. So that does it for the major indexes, guys. Let's go ahead and move on and look at some of our indicators. Chart 30, here's the VIX volatility index. Again, slight down day on Friday. Not a lot to say here. You can see the last 3 buy signals whenever the VIX was outside its Bollinger Bands, it closed back inside. All those have been good signals so far. Chart 31, here's that 60-minute chart. The VIX late last week rallied off that demand zone, but again, really didn't produce a pullback in the market. Next. Here are some of these indicators that show some divergences. Again, these are not sell signals, but they are something to be mindful of. This is the percentage of stocks above the S&P 500 that are above their 20-day moving average. So back here in late December, you had a divergence relative to S&P, and we produced, that little pullback in early January. So as the S&Ps rallied to new highs, this is still really lagging. So just to be aware of. Chart 33, here's the NYSE issues advancing. And again, this tends to mirror the S&P. But again, notice this divergence you have now with the S&P rallying to new highs. This indicator peaked in December, and you can see how far it is So again, you're setting up a big divergence there. Looking at the NAMO here, remember this is the useful guide. Generally when it's below zero, you're downtrending. When it's above zero, you're uptrending. And it's been, as the NASDAQ has rallied to new highs, this has been negative. But it has come back quite a bit. It's approaching the zero area. Let's see if it can go positive again or not. Next, number 35, here's the breadth thrust indicator. Again, you can Google that if you don't know, but Martin Zweig came up with that years ago. And remember, back in late October, we had a confirmed breadth thrust signal on that first week rally. And that's the indicator going from oversold to overbought within 9 days. And it actually did it in, I think, 4 or 5 days. Otherwise, here's another thing, guys. You can also use this as the mean reversion. So we were uptrending here. We had that pullback in January. This indicator got oversold. That could be a mean reversion buy, and that would have played out nicely. So you can actually, instead of just using this for breadth thrust, you can use this as mean reversion when it gets oversold in uptrends. Chart 36, here's the NASI summation index. This also tends to be a good guide following the market. You do have a divergence here as this, this had crossed down. Next. Chart 37, here's the NYSI indicator, the 9 EMA crossover system. Again, it's been an excellent signal for buy and sell signals, as you can see. If you use a confirmation trigger line, you can filter out some of these whipsaws. So for example, this had crossed basically in early January for a sell signal. But what I mean by confirmation is you need to take out the low of that candle, which never happened. So we never got a confirmed sell signal. But you can see the divergence is setting up here as this indicator has been going lower while the NASDAQ has been going higher. So those are some divergences showing up in the market, guys. Let's move on and look at the market sectors. Chart 38, here's the energy area, like I said, is what stood out last week. XLE up 5% for the week. We've had some nice long ideas here. Nice move up here. Again, it still has lower highs in place, but this area's had a nice move. Chart 39, oil services, still in this downtrend channel, but really nice rally up for about 2 weeks in a row, tagging the downtrend channel line. Chart 40, here's the weekly chart of oil services, and I like this weekly chart. You have this long-term uptrend line from 2020. You have a nice clear downtrend line here. If we can break this, that gives us a shot to move back into here. Now, if we can get to this thin zone, guys, this is a thin zone because look at your price by volume. It's really light. So it doesn't offer much resistance. If we can get through here, I think oil services could go all the way up to the 420 area. That would be a big percentage move. So that's kind of a swing, longer term swing trade to keep in mind. Now let's look at some of the energy names that we've had as long ideas. Ideas, not ideas. ExxonMobil, I had it as a long idea over a week ago off these dojis. This is a situation where you have a doji candle like this. You can go long, basically 1 penny over the doji, put a very tight stop right at the low there. So your risk reward is defined. It's good. It's had a heck of a move up here. Based on your risk reward, this is probably up 3 or 4 times what your risk was. Congrats if you took this puppy. Chart 42, XOP, S&P oil and gas exploration. So far, nice move up in this wedge-like pattern. Chart 43, Chevron. I also had this as a long idea. This is a demand zone, which it rallied off nicely so far. Here's some other ones to monitor. Here's VLO, Valero Energy. So breaking through a resistance here on Friday, you can see the volume pick up the last couple days. This would be your initial target area, the supply zone up here. Chart 45, NOV, another energy stock. Very strong, not too far from its highs. Breaking through some resistance here. So this looks really good. It's very strong. This would be your initial target, but I think it eventually takes out those highs. Next, doing a quick follow-up on these other sectors. Here's the transports, IYT, up here at this resistance. The bullish view kind of had, this is basically like a cup and handle look to it. Chart 47, here's XLK technology. Again, very similar look to the Qs. like I said, got quite extended last week with this black candle on Friday, pulling back some here. Chart 48, there's a 60-minute view. So to set up the evidence for a pullback there was on the 60-minute time frame. You had RSI and MACD divergence, and that's been playing out a bit. Chart 49, XLY or XLC communications sector. Again, this contains some of these big cap tech stocks like Facebook and Meta, Amazon, stuff like, I thought Amazon was in here, maybe not. Now, anyway, Netflix, you can see the big stocks in here. This is the weekly view, up 3.8% for the week. Chart 50, here's financials. They've been having a heck of a rally here. They were in the gutter last fall, rallying to new highs. Again, this new high is setting up some MACD divergence, so be aware of that. Chart 51, the bank sector, also doing okay. There's an open gap up here from March. That could be a magnet up over time. Chart 52, XOP consumer staples. Nice rally up. Right now it's setting up into a nice consolidation pattern. Could buy it if it breaks over that trend line. Chart 53, real estate. That's been correcting lately. Not surprising with those interest rates. Still hanging on to the 50-day moving average for now. That's your current support. All right, let's move on to the bond market. Chart 54, here's high yield corporate bonds. The market tends to follow this. Right now, it's setting up into a coil pattern. Should it break to a new high, you're going to set up for a MACD divergence here, so be aware of that. Chart 55, here's the S&P with high yield corporate on one chart. Again, the 10 are highly correlated, as you can see, when divergence is set up, like you see there in July, where you saw there at the October lows, where you had a positive divergence in the high yield corporate versus the S&P. That led to the rally. So it's something to pay attention to. Right now, the S&P's got a higher high. High yield corporate has a lower high. So unless high yield corporate takes out the recent highs here, you have a divergence here that you got to at least pay attention to. Chart 56, 10-year treasury yield continues uptrend. Right now it's in this nice uptrend channel. Added some fibs here. Looks like I need to flip this. The 61 fib here, this should be the 38% fib. Okay, this should be the 50%. That should be the 61.8 fib. But this 38% fib here is probably your initial target. Chart 57, TLT 20-year bonds obviously moves opposite of rates, continues downtrending. Here you got a steep downtrend channel to monitor. Chart 58, here's a 2-hour view. So the 2-hour view, you see a nice clean channel. If TLT can break out of this channel, then I think it could start at least an uptrend here. There's an open gap. That may help the market rally further if that happens, because TLT goes up, rates would pull back. Chart 59, here's the big picture of TLT. Again, what allowed me to call a major bottom there in October was when this had a clear 5 waves to the downside with RSI and MACD divergence. This is what I postulated that could happen this year, a rally up, which we've gotten part of this. Appears to be a wave A. I do think it still goes higher over time. And then we get a pullback in a B, then we get another move up in a C. Because this area is now in a secular bear market, I do think overall it forms a lower high. Again, we're not going to see rates back at 0% like it used to be, guys. That is over. Okay, but that's what I've been postulating. Looking at the yield curves, we got to keep an eye on this. The yield curves continue to push up. They're still inverted here, though. But typically when they go positive, that's when you actually get your real recession. So it's something to maintain or watch. Chart 61, here's yet another yield curve. This isn't the official one. This is the 30-year divided by the 2-year. But, the past signals have basically mirrored the other one. But this one is actually slightly back above the inversion. So just something to be aware of. Moving on to commodities, chart 62, DBC finally clearing that resistance downtrend line last week, largely helped by crude oil, which is a good 50% of this ETF by weighting. Chart 63, here's the bigger picture of DBC. Again, to me, it looks like it's been in this roughly 2-year consolidation on a bull market. Moving average ribbon's really pinching here now. So it's setting up to a big move, and maybe it'll be a big move to the upside. If that happens, then we're going to see inflation come back. Commodities go up like that. Jeffrey 64, crude oil up 6.5% last week, big week. Again, this is the weekly chart. The 200-week moving average on a weekly time frame, guys, is generally very important. You can see how price has been, that 200-week moving average has been defending price, essentially, for the last year. We've rallied off of it again. Jeffrey 65, here's the daily version of crude oil. So we broke out of this coil. So this does, that wave 5 I put in back in December looks like that was the case. We need to take this 5 off here. We rallied off the demand zone. This is helping the energy market. We had a symmetry break there as well, so that helped form a higher low. Jeffrey 66, natural gas weekly view down almost 3.5% for the week. Nice correction. If this is your long-term support, we'll see if it eventually works down to there or not. Jeffrey 67, copper, up for the week, down the last couple days. Almost has a little head and shoulder look short-term there. But again, you'd have to break this neckline there for that to even be consideration. Jeffrey 68, DBA, agriculture ETF. This broke out over a week ago and has been moving nicely higher. I love the weekly version. Here's the weekly chart of DBA. And look at this. You have basically like a cup and handle here. So this, to me, looks like a good swing trade. Where could the swing stop go if you wanted to keep it real wide? Right there at the higher low. Moving on, uranium. Here's URA. Continues to pull back here. I am watching this here. It's near the 20-day moving average. I'm looking for a trigger here to add to my position. Jeffrey 71, here's the monthly view of URA. Again, I became bullish on uranium back in 2020 when it broke out of this Weinstein stage 1 base. You then had a couple-year consolidation. It was coiling last year. I pointed out the coil break mid part of the year around July, and it's been up since. To me, this is my longer-term targets up in the 40s. That's an excellent percentage move. Jeffrey 72, Bitcoin. This is the weekly chart. Remember, a few weeks ago, it stalled at the 61.8 fib. It's trying to bounce back here a little bit. Jeffrey 73, there's the daily. Again, you can see that big old divergence we had on the MACD and RSI. That corresponded with that Bitcoin news with BlackRock, stuff like that, those ETFs. It was a textbook, buy the rumor, sell the news. Pull back, now it's bouncing back a bit. Looking at some of the stocks, here's Mara. Mara bounced off this demand zone, which we showed. I showed this as an ABC. So far, it's giving you a nice trade here. Jeffrey 75, here's the 60-minute chart. We pointed out the 5 waves to the downside with MACD divergence. Initial stop right there at the higher low. And it's been a nice trade so far. Jeffrey 76, Coinbase. Kathy Wood's favorite. Kind of a wedge here we're trying to break out of. We'll see. All right, moving on. Looking at the US dollar, here's the US dollar. It's had a nice little rally from those lows, which has not helped the precious metals. Retracing roughly 50% of that move down. Pulling back some on Friday. Looking at gold, here's gold on the daily. And gold was down slightly for the week, about 0.5%. The problem with gold has been the stocks have been underperforming. Remember, GDX-GLD ratio, reason why we follow it is because generally the stocks lead. Okay, when they're lagging, you want to not really be in this stuff. And it's been lagging here. Little outperformance late last week, but we need to see more than that. Okay, otherwise we'd still have higher highs, higher lows in place for now. Jeffrey 76, here's silver. This is the monthly chart. Again, I just continue to show this. So it's down 5% for the month. But what I'm monitoring is this coil. When it eventually breaks this coil, I think it's going to be a monster move. Looking at the precious metal stocks, the gold miners, here's GDX, weekly view, up 1.4%. So they did outperform gold last week. Otherwise, it's in a big coil here, nearing the lower portion of the coil trend line. Jabber 81, here's the daily version of GDX. So there's an open gap here, which could be a magnet. Again, I mean, honestly, you look at this, you know, nothing screams here that you got to be long this stuff. Just, again, gold bugs need to show us something. Jabber 82, here's the 2-hour version. See that gap below. We did have a little symmetry break here, so we do have a little higher low. We'll see if we can maintain that or not. Here's the ratio. All right, guys, that'll do it for that. Let's move on to our recent trade ideas. So Jabber 83, ALPN. This was a long idea of mine on my Thursday newsletter. You had a big move up there, huge volume, and I said this looks like a momentum play. So I said I'm going long over Thursday's highs. That occurred on Friday, and if you bought that trade, it was up 15%. So an excellent example of just a momentum trade, was an easy trigger off that 22 area. I'm not viewing this as a swing, so you know, be aggressive on taking profits on this puppy. Jabber 84, PTLO was another one I put out last week. Was one that was oversold, had a trigger here, broke that. The next target is the 20 MA here. Jabber 85, AMPH was a short idea last week, and it gave a trade. A little inside day on Friday, but it gave you a trade there. It is profitable. Jabber 86, RVSN was a long idea I put out last Monday, and boy, look at this monster move. And heck of a move here. Low price stock. If you bought that gap, I mean, heck, Friday it got into the 11s. Up roughly 400% from that entry. Hell of a move. What stood out about this stock to me was the base and the volume. Okay, the volume was really picking up. That's what stood out to me. Now, fundamentally, I think the company's a piece of crap, but it's just a trade. Don't marry it. Don't put a ring on it. Don't have kids with it. You know, just trade it. Jabber 87, NVIDIA. Again, this is a long idea of mine I put out early January. Perfect textbook ascending triangle. Coil, busted out nicely. Hope you took some profits by now. Trail your stops up. You can see where the KISS system has its stop. Here's Microsoft, same deal. Beautiful coil that we had. Excellent trade. Remember, this KISS system's long here. You could also see where it's putting its smart trailing stop. Jabber 89, SMCI, another one that's played out beautifully. Make sure you've taken some profits. I'm no longer in this one. Jabber 90, BABA. This is a Chinese internet type play in a nice downtrend channel here. You had a divergent low at the bottom. I do potentially like this one. So one I'm monitoring. I own a little bit of it. Jabber 91, Jets. I pointed this out. First off, Jets was the long idea back there in November out of this steep downtrend channel. Produced one hell of a trade percentage-wise. Had a 3-wave pullback, and I thought that looked lower risk, and it's been a nice trade from that ABC. By the way, guys, pro tip on uptrend moves, ABCs are your friend. Okay, consolidation patterns can be more complex than that, but typically in uptrends, you want to look for 3-wave pullbacks. Those are buying opportunities. By the way, the KISS systems they look for ABC pullbacks. That's some of the logic in them. Jabber 92, Hershey. Here's an idea that hasn't triggered. I'm long a little bit of this. My stop's right there. If it breaks the coil, I'm going to add to my position. But a great example of a thing where you have your risk defined and just a nice chart. Jabber 93, here's a 2-hour view. Again, you can see the coil here a little more clearly. Again, you could wait for the price to break out of the coil before going long, or like I did, you could have went long near support with a very tight stop. Jabber 94, Lab. This is still a valid setup over this 250 area. Needs to clear that. Jabber 95, TSBX. Nice basing pattern. It's been on the list for about a week. It's still valid. Okay, still valid long. Jabber 96, BDTX, another valid long. Nice horizontal rectangle pattern. Jabber 97, EXC was a double bottom play I put out last Thursday. Again, you could be long, have a stop right there at the lows. Jabber 98 CX, kind of a cup and handle I put out last week, trying to break through some resistance here. Jabber 99 TEO, bull flag type setup that was out last week, still valid setup. Jabber 100 Rivian, I pointed this out last week. I took a little shot down here near the demand zone. I got to stop below that 1459 area. Jabber 101 BABA, I already showed the daily. Here's the weekly. So in BABA here, you have a big weekly wedge forming. So it is something to watch. It's had a hell of a correction from the 2020 highs. Could be a lower risk down here. Jabber 102 DOCU, here long idea over this upper resistance trend line, stop at the lower trend line here. And Jabber 103 NVEI, clean resistance over this 2450 area. Could probably put a tight stop below Thursday's lows, and this would be my initial target, this supply zone. All right, guys, that'll do it. Looks like the newsletter is about 51 minutes. Again, thank you for your patronage. And if you're not a subscriber, please consider subscribing to Breakpoint Trades. We've got an awesome product here. I think you'll enjoy it. You get access to our systems. And again, enjoy the rest of your Sunday afternoon and evening, and see you this week. Take care.